find it because I like the first one.
Yeah, you'll like the second one too, because the second one kind of expands a little bit off of parameters in the first. I won't tell you any more than that because it'll ruin it.
That's fine.
That's the genre of movies I like. And there's another one that's kind of like that. When a little girl goes and lives with her dad and she's never met him. But it's the costuming that makes me just sit and it's like, oh man. Because it's not steampunk and it's not Renaissance. It's like the two of them put together, but it's its own thing.
Crystal and I like the genre that some people call Nordic noir, where you take a cop show that was filmed in Norway, Sweden, Finland, and sometimes it's in English and sometimes it's dubbed. I don't care.
Yeah, I can.
Viking Wolf.
No, it's just
it's
current time. It's just you know.
Yeah, no, there's a show out called Viking Wolf that is that way.
Yeah, they call it Nordic noir, and I really like it.
Shows like I don't like the dubbing because it for me it's the mismatch of what I'm hearing versus what I'm seeing.
I get it, but I'd rather do that than have to read the entire thing because then I can't watch.
Then you're not watching the show.
Then you're not watching the show, and especially if you're watching a mystery, you're missing clues.
Right.
I love you. My daughter, she found this thing about why women to Woosah, we put on a crime murder mystery and we're learning how to kill people.
Fetch. Yeah. Miss Peregrine's
School of Peculiar Children.
Yes.
I love that movie.
What a surprise.
That is a good movie.
That is a damn good movie.
And I like the one
and I like when Samuel L. Jackson
case.
just really. I'm a big fan of Samuel L. Jackson. So.
All right, let's go ahead and get started because
I just texted Amy. I haven't heard back from her. So.
Apparently this is what we're going to get today. I think Sergio said he was going to Cali.
Yeah, he's going to be here
Thursday, I think.
I think so.
She said she was coming along with that.
Oh,
We'll see.
Jesus Christ. I'm taking a day off.
Oh, I will not be
Somebody's
here Wednesday.
pulling up.
All right.
Somebody's coming.
I will not be here Wednesday for class.
Is that Amy?
Maroon?
No, it's her. Haven't seen her in a while.
Who?
The Mexican lady?
Yeah.
Oh.
Not on time.
I won't be here for class and the office won't be open.
When?
Wednesday.
I'm only open for class.
We're only going to be open for class. We're not staying open until 5 because it's my anniversary and I'm making a special dinner for my husband.
Well, at 8:30 I got to take Karen for an echo, and then at 12:30 I got to take her to Hutch for a Social Security appointment. So, yeah.
That's fine. I'm sure Brett won't mind no payroll.
Well, I'll probably come in Thursday.
Oh, besides, I think I got a message from Cox saying that you were going to have problems on Wednesday anyway.
Really?
Him, not us.
Oh.
Why am I not surprised by that?
See? There's Amy. Yay.
You're
Did you
late.
get my text message?
No, not yet. I don't.
It says, are you coming? I miss
Yes.
seeing you.
Yes, I know.
You're late.
Maybe I didn't recognize.
What?
Were you in
Nothing.
the white car?
All right.
I don't know who that was. You tagged on it too.
Chapter 11, we're going to finish up basically with the non-refundable tax credits because Chapter 12 is Schedule C.
Oh,
Dun, dun, dun.
I missed Schedule C day. Well, that'll make you happy.
Oh, you're going to come back in time for Depreciation Day.
Oh,
I
well,
won't be here. I hate depreciation.
you'll have Shannon for Schedule C's, and then you'll have me for depreciation.
I'm quitting that day. Wait, is that a Wednesday?
No, it's Monday.
Oh, good. Because if it was Wednesday, I have to work. So.
You won't be here for Depreciation
sit through it twice.
Because you need to get good at it.
Yeah, I know.
Not that hard.
It sucks.
It sucks setting it up.
Hey, you're on time.
Ish.
I knew that was gonna happen.
Right there on the corner.
I was looking for a pin too. Okay, thank you. I'm all in the camera.
Grab you some M&Ms.
All right, so like I said, we're going to finish up with the tax credits,
There's all kinds of stuff in there. Just do them.
at least the common ones. We're obviously not going to cover them all because there's just too many. They're too obscure.
I'll keep that for a while.
As you get to them, you can look into getting more information, but no real sense in covering all of them. And even the word common up there is somewhat of a misnomer.
Yeah.
So we're going to talk about the premium tax credit, the foreign tax credit, retirement savings contributions credit. You want to talk about something that's practically worthless. Let's talk about that one. The residential energy credit, the green vehicle credit, and
Another
those all sunset on September 30th.
Well, the clean vehicle credit sunsets September 30th. The residential energy credit sunsets December 31st. So the clean vehicle credit is already gone, but it's about
But-
as worthless as the retirement savings credit.
Yeah, no, they're not good credits. And on top of that, they're still in effect. They're still in effect.
Yeah, they're in a.
If somebody did something to qualify for it, you still run it, but they would have had on
Yeah.
the clean vehicle credit, they would have had to purchase the vehicle before September 30th.
Right. And qualified, which is
Yeah, the qualifications was outrageous, but we'll get to that. And a few other credits. Again, we have some most of these, almost all of these are non-refundable except one. Premium tax credit.
Yeah.
All right, so we're still on Schedule 3, non-refundable and refundable tax credits. You see all the credits that are available, and we're not going to talk about all of these. Some of them are so distinct to a certain area, like Part 1, Line 8, or Line 6H. You gotta live in the District of Columbia to claim that tax credit. Well, that's a little far away. I don't think we're gonna worry about that.
No.
We talk about 6E for a minute, but that just says it's reserved for future use. It's been that way for years. So the one that we're going to talk about, this is probably the biggest
one that we'll use the most.
It's the one that's used the most. It's one of our biggest causes for rejection of an electronically transmitted return.
And one of our biggest causes of people owing instead of getting a refund.
Yeah.
Yeah, so when you have somebody ask you, how can you stop doing that? What advice do you give them?
They have to call Marketplace.
Typically, what I do is tell them to. So if I have a client with a 1095A that comes in and they owe back $1,500 because they got too much credit, I tell them to go back into the marketplace, find out what their annual income is for their subsidy, because that's where that credit is based off of.
Right.
Right.
But it's
So-
a predicted one by you, right?
I know, but
You
the
have
trick is that if something happens where you're on pace to make more money than you were last year, where last year was what this year's credit's being based off of, you have to make the adjustment midstream.
And that I know that's what Joe does. Joe if she knows she's going to work more a specific month, like right now, she's on a
She's on
temporary.
She's on a
extended-
long-term sub
Yeah.
position.
So she's adjusted it for these months that she's teaching.
right.
Okay, but like I had a guy come to me and he said, "What do I do to not owe?" What would you tell him?
When you're figuring out your subsidy, include all of your income.
Right. Well, what
Okay.
if you work at a job where you don't work 40 hours a week? You may work 10 this week, 20 next week, 30 next week, 5 the next week. How do you do that?
You have to keep track of it.
I
They're
would,
gonna have to call every month.
I would go, I would go off of, I would take my W-2 from the previous year
Mhm.
and look at my W-2 from the year before and see how much it went up. Okay, so in 24, my W-2 said I made $18,000. In 23, my W-2 said I made $15,500. So when I'm figuring my income for the next year that I haven't even worked yet,
Right.
I add $3,000 to the income that I know I'm going to make, because I know I'm going to make at least $18,000.
So basically, you want them to overshoot their income.
Yes,
Always.
always.
Okay.
Always overshoot. So if his total income, not his adjusted gross, but his total income was $58,000, and the year before his total income was $55,000, then in December when he's renewing his plan, he needs to go in and redo his subsidy for $62,000, even if he doesn't make it,
Right. Right.
The
because
worst
if
thing that happened is he doesn't make it and he gets refunded.
he gets money back.
Yeah,
Because
see,
he didn't
that's
get
the biggest
enough
thing.
subsidy.
That's why we don't sign hell yeah, because I'm so scared we're going to end up paying in.
Well, I mean, like we said, you either look at it from his way isn't terrible either.
Right.
And it's kind of heading it off at the pass. Joe's way isn't bad because that way she's not overpaying throughout the entire year.
Right.
So whichever way you want to go, but you have to keep track of that.
Yeah.
Because again, Matt's only works under the assumption. Now, if he goes in there, if his guy goes in there at the end of the year, oh hey, yeah, by the way, this year we're gonna, you've been here long enough and we like you, we're gonna give you a big promotion and $10,000 raise. Guy's screwed
Right. Right.
Depends on when his raise takes effect.
in December. Yeah, you have no shot.
Well, if they're going to give him a $10,000, if they're going to give him a $10,000 raise,
It probably wouldn't start till January.
yeah,
If they start in December, he has no shot.
Right.
right. But I mean,
All right, so let's
All
talk
right,
about the
sorry.
credit for those
I'm
that
sorry.
don't understand what we're talking about.
Sorry.
sorry.
Premium tax credit is a refundable credit designed to help eligible low and moderate income individuals and families to be able to afford health insurance in the health insurance marketplace. Some people call it Obamacare. Some people call it the Affordable Care Act.
Most of our clients understand it as Obamacare.
Yes.
Shane doesn't like us calling it that, but that is the easiest way for
To
our
explain it
clients
to
to
them.
understand it.
Yep. Sorry,
I'm
Shane.
sorry, I prefer ACA.
I know.
I hate the idea of attaching an idea to just one particular person. Even Obama didn't call it Obamacare. I mean, come on. It's always been the marketplace. Let's see here. If you, in general, if you're eligible for the premium tax credit, you're not eligible for Medicaid, employer-sponsored insurance, or other acceptable coverage. It's not necessarily. I mean, it's designed to be your primary insurance, but it's not designed to be your primary insurance. Does that sentence even come making sense? If you have other options, they would prefer you to take the other options.
As a matter of fact, if you have other options, you don't qualify for the health care through the marketplace.
When you enroll, the marketplace will estimate the amount of premium tax credit you'll be allowed for the following year. This is where the problem starts.
Yes.
Their estimate is based on your household income for the year, and they're using last year's numbers. So if it's time to renew, basically right now, and they're looking at your 2024 tax return to figure out how much your subsidy is going to be. Well, it kind of sucks because you're 10 months through 25.
Or if you have a situation like my husband.
Yeah, where are
He
you
went
at?
from $80,000 in pay, and right now he's at 20.
Where are you at? You can then choose to have some of this or all of this estimated premium tax credit paid in advance directly to the insurance company on your behalf. These are referred to as advanced credit payments. You're figuring out, or marketplace is figuring out how much government subsidy you're qualified for, what your out-of-pocket expense would be, if any.
That's how they go from having $1,000 a month premium for insurance down to $150 a month.
Right.
Because they're taking that monthly subsidy that you qualify for, subtracting it from the premium the insurance company is charging, and having you pay the balance. It's kind of like Section 8 for healthcare.
So at the end of the year, the health insurance marketplace sends out this form 1095A.
The bane of our existence.
And a lot of people come in here and want to file a tax return and don't have their 1095A, and we don't know that they're on the marketplace, and it'll reject because we need this form.
And they'll tell us.
Oh, they tend
Yes.
But-
Most people throw it away. They don't know what it is.
And,
They
and,
think it's just proof of insurance, they
And-
don't need it.
and clients will tell us, no, I didn't have any insurance on the marketplace.
Did you call them or look at it? No, you didn't.
Nobody looks at that.
Right?
And the problem is that Matt's kind of right, because 1095A, that's important. I gotta have that. There's also a 1095B and a 1095C. I don't care about those.
Unless you have dependents and you get them, then please bring it to me.
Yeah, no, it's proof of residency, or at least helps. But 1095B and 1095C are all having to do with health insurance. The difference is where you're getting it from. Whether you're bought your own plan from somebody else out on the market,
You have a state plan.
you have a state plan, or you have a plan at work.
Yep.
All makes the difference whether you get B or C. Only A's get it from the marketplace. A means that you have a filing requirement, whether or not you made a dime in money. If you didn't work all year, you had no income, but you had health insurance through the marketplace, you have a filing requirement. And if you do not, you might not qualify for health insurance next year. Because you're not current on your taxes.
Yep.
And it should be mailed out and be in the client's hands before December or January 31st.
Well,
Supposedly.
it's supposed to be mailed out by January 31st.
Oh, that's true. So give it till February 5th. Anybody listed on their tax return, taxpayer, spouse, or dependent, had even 1 month of health insurance through the marketplace, must include the related 1095A, which then feeds Form 8962, which is not horribly important to you, to reconcile the premium tax credit. 8962 takes a look at the information in 1095A, compares it to your income for the entire year to find out whether or not you got the right amount of subsidy. And if you got too much, you're going to owe, and if you got too little, you're going to get more subsidy, just in the form of a tax refund.
Mm-hmm.
When these forms are missing, the IRS's e-file system automatically rejects them, which is a big improvement over, just 3 years ago. 3 years ago, it was a letter.
Oh, yeah.
It was only a couple years, just recent history that the IRS started making it so if it looks at the return and that Social Security number should have one of these forms and flags it and then rejects it. That's still relatively new in IRS world.
It's nice because then we can get right on the phone, turn around and call our clients and tell our clients, your return rejected, you need to do this.
And we've got the number for them, the website for them. All they have to do is we've had them here at the desk and talk to the agent on the phone and filled out the form.
So
Yep.
rejects it, it tells you why.
Yes.
Yes.
When I look every morning, Matt looks every morning, and we look for rejected returns, and then when we see one, there's a place that we can go on that return to find out it's under filing status. And it'll tell me exactly why it rejected.
And who,
Sometimes you have to read a little into it.
Yeah.
And whatnot, but typically it's pretty well straightforward. Return for the primary taxpayer cannot contain the same Social Security number as another return filed for a primary taxpayer or spouse for the same year.
Right, and it tells you what number it is.
Yeah, and then in the column next to it, it'll list the Social Security number it's referencing.
Which, when it comes to dependents,
Is nice.
is nice to a point. Your problem is that it only goes to the first reject,
Yeah.
and then it throws it out.
Yeah, and if you've got several kids that have been claimed, you gotta file it again, and then you
file.
find out the next kid,
Yeah.
and then the next kid.
Yeah, it only checks up to the first reject and then throws it back. So
Yeah.
you can go. I've done this multiple times. You know, she listed 3 kids,
And all 3 of them.
and
were claimed.
at the end of the day, all 3 of them were claimed on a different return.
Yep.
But it took me 3 transmits to figure it out, because, like I said, it only goes to the first problem. Up.
And it doesn't tell you how to fix it.
It just tells you what the problem is.
Because I had a return a few years back. Client brought everything in, we put everything in, and I got a name number mismatch on a dependent for the name and the Social Security number didn't on my return didn't match what IRS database showed
Social Security
or
database.
Social Security database showed. So I'm sitting here for 3 hours trying to figure out what the hell is going on, and come to find out, and this is a really bad thing with Social Security. If you decide that you want a hyphenated name in Zonker Albrecht,
Oh, Jesus
they
Christ.
may not put the hyphen in there.
Yep.
It may just come up Matthew Douglas Zonker Albrecht, Matthew Douglas on one line, Zonker Albrecht on the other.
And sometimes they count that second last name as the first last name, and the first last name as the middle name.
Yes.
Yeah.
So a lot of times when it's looking in there, is Matthew Douglas, is Matthew Matthew would be my first name, but is Douglas and Zonker my 2 middle names, or is Zonker Albrecht my last name, or is my last name just Albrecht?
Yeah, and you gotta play with it.
And yeah,
You have no idea what the clerk at the Social Security Administration typed in. You got to play guess.
I had one like that. It took me 3 hours to figure.
Yeah.
And the spelling of these poor babies' names nowadays. Good luck
Don't
with
get me
that.
started on that.
Oh
It's
yeah.
a pet name and it's not. It's a real name.
That's the one comedy skit I like that what's his name, the tall skinny black guy does from Keenan and Peele,
Dave Chappelle?
no, the tall black guy from Keenan and Peele,
Yeah.
where he's standing in
Oh,
as
yeah,
the
I know
teacher
which
in the classroom.
Aaron.
Yeah, yeah. Jaqueline. You mean
Yeah.
Jacqueline? No, now come on, it's Jaqueline. We know better.
Yeah, I've seen that. That's funny.
Krista had a student's name whose first name was a bottle of cognac.
What?
Crevassier?
Cavassier.
Uh,
That was his
And
first
It was
name.
actually a bottle of.
No.
That's what I was
That's a
like.
lot
I was
to
like,
spell.
his name.
That
was
would
a
be his
bottle of
Indian
cognac.
name. All right, come on.
Crevassier Hennessy.
That would have been his middle name. I have no idea, but that was his first name.
We got some
Pretty classy. I mean, Cavassier ain't cheap. I'll tell you that much. All right, so like I said, 1095A feeds 8962. You'll never actually see this form except when you print it out because you don't do anything. You input the 1095A. The computer does the work on filling out this form. But this is where we're going to find out because it's going to take all that information. What your premium what your premium was, what your tax credit was, what you actually paid out of pocket, compares all those together, and then takes it to your income level to find out whether or not that was the right amount of credit. And that's all based on last year's information. That's what we were talking about earlier. How do you keep from getting in trouble? Because if I got a raise, if I got a big bonus, that changes my income compared to last year. And all of a sudden, I might be getting too much credit. And if I get too much credit, I got to pay it back. One of our records was
Oh, jeez.
out of the
Like,
Maple West office, and the lady ended up owing 13 grand
yeah, yeah.
because she actually signed up, she qualified for it, but her income, she took so much out of her retirement that year, and she wasn't on Medicare yet.
Mm-hmm.
She took so much out of her retirement that year that she no longer qualified at all. Her
She
income
took
was
like
way too high.
$100,000 out, didn't
Yeah,
she?
yeah.
Yeah.
And you know, she didn't think about it. She had no idea what was about to happen to her because she didn't talk to us.
Well, my car dealer last year when I did his taxes, he is on this because at the end of the day, you know, he only makes between $35,000 and $50,000 net profit after we get done with all of his stuff.
Mm-hmm.
Not last year. Last year he had, you know, a net profit $160,000. So his whole $4,300 subsidy he got through the year, he owed back.
Yeah, at least he had an income to base it off of. She was basing it off very little income,
Right.
and then all of a sudden she had this big infusion of cash, and it really came back to bite her.
Typically, whatever you made last year, add $5,000 to it when you're doing your subsidy,
And then still pay attention.
and then yes, still pay attention because there's a spot there's a sweet spot in there where if you go over or you're under by just a little bit, it doesn't tax you. But that number is very small. It's like $350 or something like that. So if the number you tell them that you're going to make isn't exactly right, you make $1,500 more that year. So you only owe you got $150 too much refundable credit. A lot of times they just kill that and they don't worry about it. But if you got $1,500 too much credit, that goes on your tax return as an additional tax.
That's
And
not payable with non-refundable credits, by the way.
Yes, you cannot pay that tax with non-refundable credits.
There's a few taxes you cannot pay with non-refundable credits. This one and self-employment tax jump to the forefront.
Yep.
Neither one of those can be paid with non-refundable credits.
So if you take your retirement and you buy an investment with it, you still have to pay taxes on that money tomorrow either way. Doesn't matter.
Because you took it out. And it's going to count as income, and if you're in this type of plan, it might come back and bite you again. You have to know, I mean, talk to your financial planner guy, talk to
Yeah.
us, take a class like this for God's sakes.
At the end of the day, if you're going to use your retirement, your 401k, whatever, your IRA, to buy an investment property, my suggestion, instead of withdrawing that money out of your 401k or your IRA, find out if your plan allows you to borrow against it and take out a loan using your IRA as collateral. I have $300,000 in my IRA. I need $150,000 to buy these 3 investment properties. Get a $150,000 loan. You accomplish the same thing, and you have no income. Instead of pulling $150,000 out of your IRA that you're going to have now $150,000 of income on, you're only going to get $120,000 or $110,000 of it because there's going to be mandatory withholdings, federal and state. So you're still going to have to come up with another $40,000 somewhere to do your investment properties. If you can borrow against it, it would be better to do it that way. You don't have any income listed. Because if you go out and you get a loan to buy the properties,
That's not
that
income.
loan's not income.
You gotta pay it back,
You're just using your retirement as collateral to secure the loan. So if you default on the loan, they can take it out of your retirement. At that point, you may end up having income.
Yeah, you will. The amount of premium tax credit is reduced by the amount of advance payments. Well, obviously, the advance payments is your credit.
Yeah.
If the advance payments for the taxable year exceed the allowed premium tax credit for the taxable year, the tax for that year will be increased by an excess. In other words, if advance payments are greater than the actual premium tax credit, you got to pay back the excess. Again, just like you're saying, you're trying to figure out how much credit you're supposed to get, and then at the end of the year, we actually figure out how much you actually were supposed to get. We're guessing, comparing to actual, and it's been a year.
Yep.
And if you got too much, you have to pay it back. If the advance payments exceed the premium tax credit, line 29. Like I said, that's where most of our people right now are getting in trouble.
They
Yeah.
don't monitor it is why they don't get it.
Well, no, they think it's just set, and then you know, a lot of people think, well, that's just monitored for me. They'll make the adjustment.
The other thing that we need to keep in mind with the premium tax credit, with the Affordable Care Act, and we get this a lot. Client will come in, no, I didn't have insurance last year through the ACA.
Oh, yeah.
So we'll run it and it'll reject back, and they'll be like, I didn't have insurance. Okay. Did you have it the year before? Well, yeah. Did you call and cancel?
Yeah.
Well, no, I didn't know I had to do that. With the Affordable Care Act, if you had insurance in December and you decide in January, because I have a new job and my ability to get insurance starts in January, I'm not going to renew my health care through the marketplace. You don't just call Ambetter or Aetna or whatever to tell them that you're canceling your insurance. You have to call the marketplace, because the marketplace, understanding that people run into rough patches, will run your insurance for 3 months without you paying a premium before they cancel it. Doesn't matter that Ambetter or Aetna didn't receive your premium. They're still going to show you insured for January, February, and March.
Under COBRA rules.
And then you're going to get a 1095A done up under your Social Security number, even though you may have been covered from your job from January all year.
And then that way, when it showed up in the mail, they threw it away. Well, I didn't have health
Yeah, I don't know what this
insurance.
is for. I didn't have this. Throws it away. Then we have to go in, or they have to go in and get a hold of them, or whatever, or if it's late enough in the year, we'll have them come in and we'll call customer service from our office. Have them talk with customer service, and we'll take down the information so we can get their return filed.
Right. If you pay foreign taxes to a foreign country on foreign source income, there's a lot of foreign there. You are subject to U.S. tax on the same income. As U.S. citizens, you are taxed on your worldwide income, not just what you make here in the States. You're taxed on whatever your money makes, wherever your money is at. Generally, if you pay taxes to both the U.S. and a foreign country, there is a credit that you can try and take to reduce the total tax.
For most of our clients, this is a dollar for dollar credit.
For most of my clients, my Canadian ones, that makes their U.S. tax liability go away
Right.
because they already paid it to Canada. They're getting a tax credit based on this form from what they paid to the government of Canada, what they paid to the government of British Columbia in income tax, and I put it on this form. And the tax rates in Canada are higher than the tax rates in the United States.
Yep.
So they owe more tax in Canada. They paid more tax in Canada than they would in the United States.
They
They
don't
paid
know.
all their U.S. taxes
To Canada.
to Canada based on this credit. And there's a lot of more confusing things that I can go into on that one because, like, there's tax treaties that are involved that have to do with Social Security and such.
For our offices, with the exception of Shane's international clients, you will only see this foreign taxes paid on clients that come in with brokerage house paperwork, where they have a 1095. Because in a
1099,
brokerage house,
yeah.
they'll do a 1099 INT, a 1099 DIV, a 1099 miscellaneous, and a 1099B, all in one packet. And
You
typically,
gotta go searching.
on the 1099 DIV is where you will find foreign tax foreign taxes paid.
because they were invested, for instance, in a mutual fund that was focused on international income.
Or they had stocks in an international power
Cooperative.
cooperative,
Yeah.
Ukrainian Energy, or something like that.
Well, that's a losing bet. But
Well, I'm just saying.
you know, I own some shares in a mutual fund called Euro Pacific, and all they do is invest in companies in the Europe and the Pacific Rim. And then whenever they're paying tax to those countries, that shows up on a 1099 DIV. Foreign taxes paid. Well, if I keep that number below 300, under married, family, jointly, then I can put that money. Well, actually, I don't need to file 1116. I can subvert it,
Tell the system we don't need it.
because the 1116 is going to want to know. Okay, you paid foreign tax. What country did you pay it to?
Yeah, who?
Well, on my mutual funds, I have no flipping idea. Could have been Germany, could have been Japan. I don't know. They have funds in both places. For my Canadians, it's really simple.
Canada. But for your Canadians, they pay more than $600 in taxes, so you have to file an 1116.
Well, I had to anyway because I don't have a 1099 DIV.
Right.
Just by the fact of really having that 1099 DIV is the one that circumvents the reason why I need 1116, because the IRS already has a copy of this 1099 DIV. They know why I'm taking this credit.
Right. That and you have to do a FinCEN too for them.
Yeah, I don't
You've got
need-
a foreign bank account.
So here's our 1116, and we can see that we actually have multiple columns in case we have multiple countries, which is hilarious because the computer on the drop-down list on countries will list various.
But it doesn't.
The IRS does not accept various.
Yeah, the drop down says various, but if you fill out an 1116, click because you have, $40 and you couldn't find the box, so you load up the 1116 and you click various and you click save, it'll go, yeah, no, that's not an appropriate selection.
Well, then why give it to me?
Yeah, I know. That's what I was thinking
It's
too.
wishful thinking that let's hope that the IRS takes various. I mean, at that point, I'll confess. I'll look at the nature of the fund. If I'm stuck having to do this because I went over the 300, I'll look at the nature of the fund and then think about, okay, well, what's the powerhouse in that area? If I'm looking that you're invested in that strong European folder,
Germany.
I'm going to say you paid your taxes in Germany. Because your French taxes won't count, because that's not income tax.
Oh.
The French taxing system, last time I was informed of such, is based on your net worth, not your income. Therefore, it doesn't qualify for tax credit. This is taxes you paid on your income. And the French system doesn't do it, so you can't deduct French taxes. You have to find out whether or not, what the nature of the tax is before you can actually take this credit. Is it taxed on your income, or is it taxed on something else?
Could I break it out?
Break it out to what?
If I could sit there and I could prove and I could turn around and say 37% of my total net worth for 2025 was based solely off of my French income, then if I owed $10,000, could I take $3,700 as foreign income tax paid, because that's what percentage of my income was credited to my total net worth and therefore taxed?
They're not going to take it.
They're not going to take it?
Nope.
Okay.
Just because
curious.
it's French,
Okay. I'm just curious.
and they know the nature of it. You can't make that logical assumption because they're not going to follow up with it.
Right, well, that's why I'm asking.
Yeah,
Because
the law-
for me, that's kind of a logical assumption.
It's a logical assumption, and they would also admit, well, that's logical. No, because again, it goes back to the nature of the tax. I mean, I see how you got there.
Right, it's not
But no.
it's not an income tax, it's
Right.
a net worth tax.
Right.
Even though my income is part of my net worth.
Mm-hmm.
Okay, I'm just curious.
And it has to be a legal tax, by the way. So, You know, you could say, well, part of my tax was I had to bribe the border guard. It was the only way I was going to get it here.
Yeah.
Yeah, that's not a tax. Sorry. And technically, it's not an expense either because bribery is illegal, and you can't write off illegal activities as an expense.
And somehow,
Claim 'em, but
and
you
so-
can't
Even
raise
though
'em.
it might be a custom in that country, hey, it's a custom to bribe that agent.
and somehow
Sorry.
I don't think I'm going to get a receipt from the border guard for
Yeah, that too.
$10,000 to let my trucks cross the border.
But I'm just pointing that out because in that webinar, I wish they would do it again. I really enjoyed it.
That is the tax.
That is the tax. You're
Yeah.
right. But since it's not a legal tax, you can't write it off. Even if they even brought it up like that, even if it is an accepted custom.
Think about it. If you went into a third world country to drill for oil or mine for a precious metal, and in order to keep your site safe, you had to hire this gang's enforcers as security. You can't, and you spend $1 million on that to make sure that your site remains safe and unmolested. That's $1 million out of pocket you don't get to expense anywhere. Because it's technically illegal. Now, if you went into that same country and spent $1 million on a PMC to protect your site, that would be a different that would be a different thing. But because you're being forced to use this region's
Warlords, guys.
warlord and his army to protect your site, they're not going to let you take that.
Don't forget when you're figuring the foreign tax credit to make sure that you are doing it in U.S. dollars. If I have a 1099 DIV, I'm not worried because it's been converted. All my Canadians, I have to convert it all. Because all I have is statements that show Canadian dollars.
Right. And same thing if somebody comes in and they're wanting to know if they have to file a FinCEN because they have a foreign bank account. So you have a new immigrant come in. They're here in the United States legally. They're allowed to work. They have all of their stuff. They come in to file their taxes. But let's say they have a bank account in Manila, in the Philippines. And when we ask them, do you have any bank accounts in foreign countries? She says, yeah, I've got one in Manila. I put money in it so that my mom has money to live on. Okay, super. How much is in that bank account? Because if they have over 10,000 US dollars in that bank account, then you have to file the extra paperwork. But how much in Philippine peso is 10,000 US dollars? If she says I've got 15,000 Philippine peso in there, and you run the conversion and find out she's got basically $27 US in that account,
I don't need it.
you don't need it.
The government always finds out.
Yeah, they'll figure it out sooner or later, or because they track that money.
Why they always send it in a Swiss bank account or something?
It's not as
Because
secret as it used to be.
40 years ago,
That was the way they
Swiss
wanted
banking
it.
laws were nowhere near what they are today. 40 years ago, you could go and get a Swiss bank account, and the Swiss would tell the United States government to take a stick and shove it. We don't. That's private matter. We don't give out that information. Not so anymore today. That's why back in the 80s, when you would see the movies with the drug lords and everything, everybody running to Grand Cayman,
Yeah, Cayman Islands.
the
was
Cayman
the
Islands
one, yeah.
to do bank accounts because they were drug dealers or assassins or whatever. They always had their money in Caribbean bank accounts because they wouldn't share the information with the United States. Not so anymore.
Well, they're privy to everything.
There are very few countries
We'll
where
get a
you,
Russian bank account.
yeah, there's
Yeah.
very few countries anymore where you can put money in that the United States doesn't have access to.
Well, but and at least the U.S. wouldn't know about it then. So, all right, down here in this part is talking about foreign taxes paid or accrued. And we noticed that, and you don't have to fill it out if you don't have this information. It says in foreign currency and in US dollars. You can fill it all out
Mm-hmm.
if you want. If you have all that information and you want to, fill it out. I do on my Canadian clients. I have the T4 right in front of me. I know exactly what they paid in Canadian dollars.
So he puts it down,
So I put it down.
and then he goes and converts it.
And then I put down my conversion so the IRS stays off my back because they can see exactly what I did. And for the record, what I do is I look at the trading rate for US dollars to loonies, which is what they call the Canadian dollar, the loon on it. And I take the high point of the year and the low point of the year, average the two out. That's my conversion rate. Usually it's about somewhere in the neighborhood of 77 cents. For every US dollar, or for every Canadian dollar they make, they actually only made 77 US dollars. Or
The-
77 US cents.
The
I should
less
say.
the less work that you require the IRS to do, the better they like it.
Yeah.
So when they pull up Shane's 1116 and they see that he's put down 187,000 Canadian dollars and then 152,000 US dollars, everything else on there, because he's shown he's already made the conversions, they're more than likely to go, oh, okay, cool, and
Yeah.
off they go. There's not a whole lot of, well, let's just see. Now, if
Yeah.
he'd have just put down the Canadian dollars and didn't put down what he converted it all to, but he put his converted numbers in the spots below it,
For the credit.
they're going to turn around and they're going to check it.
And since I already did that work for them, they're most likely going to say, yeah, okay, we see
Cool.
how you got there. Moving on.
Yep, because the way he converted it may not be the way they converted it. He took the high point and the low point. They can turn around and take the ending point for every single day for 365 days, average it out, and if their number comes up different than his, then they can turn around and kill it and say, nope, you converted this wrong.
Or even worse, what they can actually do is query my client to find out, okay, what days did you get paid?
Yeah.
And look at the spot market on those days.
Yep.
And Shane's our go-to person for other country conversions.
And the only thing I don't have to worry about is my guy in Dubai because he does it for me and I'm not going to criticize his numbers. And I don't need an 1116 because Dubai does not collect foreign income tax. Or, in that case, regular tax.
Right.
They had enough oil, they don't need to tax income in Dubai.
And you've done South Korea?
Done South Korea, that's fun. Well, he actually works for Bombardier. He's a customer service rep out of the Dubai airport for Learjet.
But if you think about it, if your country's number one export is oil and you're making $7,500 billion a year off of your oil exports, because in countries like that, it's not a company that owns the oil, it's the country that owns the oil. So that 750 billion coming in is
Feeding the coffers of the country.
feeding providing for the country, as well as the royal family that runs the country. It's all one big thing. The royal family takes care of everything.
And to be honest with you, I have other tricks up my sleeve for my Dubai guy. Since he doesn't qualify for this because he doesn't pay any taxes to the United Arab Emirates, I have another exclusion I can use for him because he has to pay for foreign housing. And that's a different tax credit that we're not going to talk about.
No.
And it's not really a tax credit, it's a direct offset of income. There is a cap. He does go over because both him and his wife work. She's an English teacher over there
At the English school.
in the international zone at the airport. But yeah, so she teaches English. Anyway, so between the two of them, they end up usually owing a couple of thou to U.S. in tax, but it would be a lot worse without the foreign income or without the foreign housing allowance.
Yeah.
I mean, infinitely worse. And then my Korean guy, yeah, no, that one's really fun because they have a similar thing to a W-2 in Korean.
Oh.
I had to scan it in as a PDF, and then I was able to open that PDF in a word processing program that had a translate ability to it.
To translate it also, you
To
could
translate
read
it to English so I can figure out what the heck it was saying. And of course, some of it, there was a little blur here and a little dust there, and so it didn't always really translate. It was like,
Yeah, when it comes up with the word chicken, you know it's not translating.
yeah. So, no,
Well, you don't know.
that's
there
why
might,
we love
there
this
might
job.
be a chicken tax in South Korea.
There might be,
Maybe.
who knows? But that's the reason why we love this job. We get thrown some of these fastballs and these curveballs, and I gotta figure out how to make it work. Yeah, sure. I can maybe have him sit down because obviously he was in Korean. I'm going to assume
He can read it.
he can at least, well, he can speak it. Reading it might be another issue because you got to learn a whole new alphabet. I mean, it'd be one thing learning German because I have to learn new letters.
Right.
Learning Korean might be a little bit more difficult. I don't know. I never asked him. I just figured it out for myself and got there. I solved my own problem, but it was fun.
Yeah.
Yeah.
I'm ready for the next one. If somebody wants to come in with Japanese, I'm there for you.
We already have that. I'm dealing with it.
If they come
Not
in,
the Japanese guy.
if they come into our office, you send them here.
Yeah, and you'll find out
We have an expert.
you'll find out my favorite thing, and this sounds really stupid, but I love going through receipts.
Yep.
Because I get to see what they're actually buying.
Yeah, I know. Oh, no, yeah, no.
Schedule C's. Those are the best.
Schedule C's, the guy comes in with Dylan's bags full of receipts. Not categorized. They could have boot prints on them from where they were blown across the parking lot.
Coffee stains.
Coffee stains, food stains. I don't want to know stains because...
Mm-hmm.
And then you've got to go through there, this Walmart receipt, because I got to find out what's actually on this receipt.
And sometimes you don't know what it is, and you have to type it in the computer to figure out what it is.
Or you get a whole tote full of receipts and paperwork and whatnot that's been stuffed away in some dank basement for 8 years, and you've got to go through all that, and it's all blacky, moldy looking, and
Mhm.
oh yeah.
I love it.
Yeah, well, yeah. Yeah, no, we can definitely go down that one because, like I said, you got to look at it. Well, the guy got lube, but it wasn't from the automotive department. Yeah, I can't write that off.
Not even for
Entertainment?
Entertainment
Yeah.
expense? No,
Unfortunately, no. That's not an entertainment expense.
I said medical. So.
no. He tried.
If,
Yeah, I know. That's
if
why I
you
said
have- if-
entertainment,
if-
because I remember
if the lube on your receipt is KY, and you also have receipts from Broadway Home Medical for
Catheter.
catheter and a
I'll
leg
entertain
bag,
that.
that might be a different story. But if you just have lube, and I don't see any other medical expense to go with it, no.
No.
And please don't let me find the Priscilla's receipt, because then you're really not getting any of it.
If you buy any...
Now, wait a minute. We'll come back to that one.
Well,
For my truck driver, yeah, the Priscilla receipt, no. For my stripper, yes.
Yes.
What?
The Priscilla, yes.
Yes.
Costumes.
Yes, costumes.
Costumes.
Yes. Absolutely.
Now,
No, you've
if-
got to come to Schedule C.
if she drops a Priscilla receipt and it says on there 12-inch double D, we might not. But
if
if
it says high heel boots,
if
or
it says high heel boots or
teddy, or something like that, yes.
lingerie
Yep.
costume,
Generally,
whatever.
anything for Priscilla's for my strippers, I'm going to take.
Yep.
Yep. Yep.
We only have one.
Well, I don't ask questions. It's
No,
business.
True though.
I don't care.
We have one, and Shane and I discussed this because Shane didn't write it off last year, but he didn't realize what it was. Always fans.
OnlyFans.
OnlyFans. Girl does OnlyFans. Anything she uses, internet, portion of her phone bill, all of that, she can write off.
Yep.
That's taxable income.
It's-
I didn't even think of
Yes.
Yeah.
But you're being paid as a subcontractor, so therefore any expenses that we can attach to it
Is a Schedule C.
is Schedule C, and it's all legal.
Business use of your home.
Yes.
Seriously,
If you have
so
if you have a
Right
two
off
bedroom,
your home
if you're single and you
A
have
portion.
a 2-bedroom apartment and one bedroom is set up for your OnlyFans,
Absolutely.
I can give you credit for that for that bedroom that you film your OnlyFans content in
Yep.
as a tax deduction.
Yep.
Because that's what you use that room for.
Yes.
exclusive use.
Oh.
That's something we'll
You
talk
can't
about.
Sleep, yeah, you can't sleep in there or just make it a dog room.
Yeah.
But
Mom and
yes.
Dad can't come and visit. You clean out your OnlyFans stuff and Mom and Dad stay in there. You can't do that.
That's not exclusive use.
No.
So those people that run those motels and they live there too, do they don't get a claim for taxes?
They don't get they don't get credit for the living portion of the motel. But all the other expenses that are paid that they pay for the motel,
Yes.
they get credit for.
They might have to pay income tax on their living because if it's included in part of their compensation package, it's income. So if you ever watch the old sitcom series Mom,
Mm-hmm.
where Alice and Janney was the building supervisor for the apartment complex, she actually got in trouble one year with the IRS because she wasn't reporting there that she was living
She didn't report
in
it
the
as
apartment.
income. Yeah.
She didn't
Right.
report that as income, although the apartment was part of her compensation package for being the building supervisor.
Yeah, you just
Yep.
basically got to figure out what the rent price would be on that piece of property.
Which
Yep.
it was just the same as any other property
Right,
in
right.
the apartment complex.
Right.
It wasn't that hard, but
If you're the building super and you're getting paid $500 a week as the building super plus your apartment, at the end of the day you make $2,000 plus whatever the rent for that apartment would be. So if your apartment rent's $750 a month, you actually make $27.50 a month because you have to put in the amount of the amount that you're being compensated for the apartment.
For living on property, yeah.
Because at the end of the day, when the owner files his, he's going to write off $750 a month
Yep.
rent
as income as an expense
as an expense.
as for wages.
What if they are the owner?
If they are the okay, so if you own the motel, then you kind of have to have one of two things set up. You have to have a separate setup for the residents for your utilities, and then you have to have all your
All the other ones.
All
on
the other
different-
ones on
different account.
or if it's all on one account, then we have to figure out the total square foot of the entire complex and then the square foot of your living space, and that percentage gets deducted from the total utility bill. So if the total if their percentage is 25%, then 25% of the utility bill they don't get to include in their deductions for their hotel.
So now that we've covered half of next week's
Schedule
lecture,
C.
Yeah.
let's try and get back to this week's lecture.
Nah.
I don't want to.
The Retirement Savings Contribution Credit, Form 8880. You may be able to take this credit, which I think I've been able to take it like twice and it wasn't worth it. You may be able to take this credit if you or your spouse have finally jointly has made contributions other than rollover contributions to an IRA or to a qualified plan.
We get this a lot.
Does it work?
I don't know. Normally,
It's always a 0-0.
well, okay, but that's the thing. Normally, if you've got a W-2 in box 12 with code D in it, they've contributed,
Right.
and the system will once you put it all in, the system will ask you to put in Form 8880. So when you're going through that, basically all the system wants to know is they know how much the person saved. they want to know, did they take anything out of any of their retirement accounts? And that's where, if they didn't, you put in 0 for the taxpayer, and if they're married, 0 for the spouse as well. And then, as long as nobody's taking any money out, then they figure out whether or not they get a tax break.
Non-refundable.
Yes.
Cannot take this credit if your adjusted gross income exceeded $76,500 if you're married, filing jointly, $57,375 if you're head of household, or the single people, including qualified surviving spouses, can't make more than $38,250.
Basically,
Already, we're kind of down at low numbers.
yeah. Yeah, this isn't designed for the family making $150,000 a year.
No, this is designed for the lower income people to still save.
Yeah. Your mom and dad that are making $50,000 a year, between the two of them, this is designed to give them an incentive to put a little bit into their 401ks that are being offered at their jobs.
Right. Now let's analyze this for just a little bit of a second. Okay, that's my income, my adjusted gross income at $76,500. But that's not my taxable income. My taxable income is assuming a standard deduction, taking away $32,000 out of that $76,000.
Yeah.
So my tax is now down to basically close to half of that.
And
That's
if I
my
have
taxable income. So what's my tax?
and if I have a couple of kids,
If I have any children whatsoever, I'm not getting this credit. It's non-refundable.
well, then it is. The
Well, it will be
nice thing-
figured first.
Yeah,
but,
it'll be figured before the child tax credit, but yeah.
People cannot take this credit who contributed and was born after January 1st of 2007. So there is an age floor. Claimants is dependent on somebody else's return, which is consistent. I can't take tax credit for myself if I'm being claimed by somebody else on their taxes. Was a full-time student during any 5 calendar months during the taxable year, regardless of your age.
Mm-hmm.
If you were a full-time student and 55, you don't qualify.
And don't let the January 1st, 2007 throw you. That just means you're under 18.
Yeah.
And not filing your own tax return.
Which, it's going to basically roll over to the second one anyway. Not only this is a non-refundable tax credit, and it's going to be based on what you owe in taxes, but we're also going to take,
You only get a portion.
you only get a portion of it.
You can save $5,000, but you're not going to get a $5,000 credit. You're going to
Yeah.
get like a $500 credit if you're lucky. Maybe a little bit more than that, depending on your income. but-
Exactly. So, I mean, you're just looking at that. Taking it times, $23,000 times 0.5.
Yeah.
Or, worst case scenario, for the married filing journalists, you're taking 63,000 times 0.1. Not big credits.
No.
Residential energy credit, which actually I don't have a lot of information on.
Okay, what do you want to know?
Yeah. What do you want to know?
Residential
Yeah, no,
energy.
you said. Yeah, no, wait, Matt said it. It was sunsetting at the end of the year.
Sunsets at the
Right,
end of the
but-
year.
It was a credit that was given for specific kind of windows, doors, siding,
Solar.
appliances, solar. But the bad thing was that people came in here that were on Social Security that thought it was a refundable cash credit because they were told that it's not, and it's based on your income, and it's write-off. It's a write-off on what you owe up to zero, and then if there's anything left, you get nothing.
Yeah.
It's nothing.
You basically get a 30% credit for what you spend. So if you spent $30,000 putting solar on your house, okay, then you get 30% of $30,000, and you get that credit and you can use that credit so long as you have a tax liability. So you have to actually owe tax before we start subtracting with non-refundable taxes to use this.
Yep.
Anything you don't use in 1 year rolls over to the next
Right.
until you use that entire credit. The problem is if your only income is Social Security and you spend $30,000 putting solar on
You're
your
getting
house,
nothing.
you have no filing requirement.
You're not
That
going to get any credit.
$9,000 you thought you were getting back,
Because they told you that.
you're not.
And I don't necessarily blame the salesman at that one.
They didn't understand.
They didn't understand the tax credit. What
No.
they said, I've heard the spiel.
What they say is actually technically
What
true.
they say is true. You can qualify for a 9,000. You can qualify for a 30% tax credit.
It's the same parameters of a senior calling Social Security and asking, how much can I make? How much money can I make at a job while I'm on Social Security? That's the wrong question to ask.
Yeah.
You can't make over a certain
You can make as
Well, no.
much as you want.
If I'm retired, I can make as much as I want.
If
It
you're
doesn't affect my benefits.
Right. If you're retired, you can make as much as you want.
amount, but not necessarily.
Yeah, no, not on disability.
No,
That's
disability is a little different. But once you're retired, if you want to go work 40 hours a week, you can.
Right.
There's nothing stopping you.
Yeah.
But
Asking
how much of your Social Security is going to become taxable income now? That's the question you need to ask.
And that's the question that's never asked. They ask how it will affect my benefits. Well, it won't.
Yeah.
Well, in this case, the guy says you can qualify for a 30% tax credit off of what you spent.
It's true.
That's a true statement. What's left over, what's missing here is that it's a non-refundable credit.
Right.
So if you don't owe any tax, you get no credit. And Shannon's case was right. This was an actual case. They came in here thinking they were going to basically pay off their solar panels
Because they were told that.
because they were told that they're going to qualify for this tax credit. Yes, go ahead. Maybe a half a pot, unless you're going to hit it.
Well, I'm going to get a cut, but
I'll get it.
Okay.
I'll
Then
get
never
one
mind,
more.
full pot.
okay.
Yeah, all right, we got enough.
The problem.
But the problem was, in their case, is that they didn't understand that this was a non-refundable credit. So they came in here and they were in the hole because they took out a loan to pay for it
And living off Social Security.
and living
fixed
off
income.
Social Security income, and that was it. And then, so they come in here to get their taxes done, thinking they're going to walk out of here with $9,000. It didn't happen
He was so mad.
because, while the salesman didn't actually lie,
He just didn't tell them that it was a non-refundable credit. He told them they would get $10,000 back, and they could pay it off with that. So the guy didn't understand what he was doing.
yeah, and I don't, like I said, I don't necessarily blame the salesman on it either because he was told about this tax credit.
Right.
Sounds great. He doesn't understand the difference. There's a difference between refundable and non-refundable.
Right.
Didn't know that because I've had these same people come to my house, and I've asked them that question because I know the difference.
Right.
They had a clue. They didn't know.
I have schooled a couple of them.
We all have. Once we know.
Yeah, I've had people call me about solar panels, and I'm like, okay, do you realize that that is a non-refundable credit? And they're like, what? And I explained it to them, and they're like, I didn't know that.
It's still a credit, nonetheless.
It's a credit. It's just not useful.
Exactly.
Yeah.
Exactly.
Yeah. So
and they don't understand.
their Social
that.
Security was their only income. They have no taxable income. They don't owe any tax, so they have no credit.
And when you tell
was
these
useless.
people that, they're like, oh, I'm going to quit saying it that way.
Which is going to really restrict their sales. But they're going after the people. They're focusing on the older people. It is a scam.
It is. It is.
I agree with you. They should be stopped to begin with. But
Don't you save money anyways? I mean, with the solar panel.
You do. You do.
eventually, but that's a big, huge upfront chunk.
Mm-hmm. Big.
That's your problem.
Don't you get penalized for having solar too? Because you're required to have Evergy.
I haven't
in our
heard that.
neighborhood.
Not that I'm
that's
aware of.
I've
Evergy.
heard that.
I've heard it.
Evergy will actually pay you.
Yeah,
because
Evergy will do credits for you if you have the solar. What is it? Not solar. The windmill.
Yeah.
Oh,
Because you can buy a windmill for your backyard for a residential size.
And if you make more energy than what you consume, you can feed it feeds back into the grid
And they
and
pay you
makes
for
your
it.
meter go backwards.
And they'll pay you for it.
Yeah.
That's about how much utilities I use.
But so to continue on this credit, I mean, I didn't. When these guys answered it, I wasn't really asking that question. But hey, we covered the lecture anyway. But in my case, last year I bought energy efficient windows, and I made sure that I bought energy efficient windows, ones that would qualify. I just didn't go down there and buy windows.
Yep.
I made sure the ones I were buying were qualified.
Renewal by Anderson.
Actually, they were Champion
Champion Windows.
They
because
have
I
this-
do his taxes.
If they have that
Right.
energy with the arrow pointing down sticker on it,
The big yellow
those
one.
qualify.
The credit sucks, but they qualify.
Yeah.
They qualify, that's the point.
They qualify, and these are the top of the line. I made sure that when I was talking to Ron, who, by the way, is my client, he's a tax client of mine, and he came in to do his taxes, and I said, what do I need to do to get somebody out to give me a bid on my windows? And he said, what time next week should I be there?
Right.
Which is exactly what I was expecting,
Right.
because he's my guy. I've been doing his taxes for over a decade.
Yeah, you'll get some hookups.
Oh,
Trust
yeah.
me.
Yeah, and he hooked me up.
Yep, yep.
He found the best deal that was available for me that Champion was offering.
Mhm.
And, I bought 9 windows and only paid for 6 of them. But meanwhile, of those 6 windows, I took a 30% tax credit last year off of what I paid to Champion. No, that was the wrong credit.
You got like a $300 credit for
Yeah.
your windows.
Yes, I was
Yeah.
going to say, I forgot about the cap.
Because it's a $300 credit for windows, $600 credit for doors.
Yeah. And I was able to do that with my windows, my siding, and my doors.
300 each window or
No, $300
No,
total.
$300 total.
Off of what I paid.
Yeah.
Well, still, I got tax credit.
It's money coming back. I mean, it's money.
Less
not
money
what
that
you
I had to
owe.
pay.
Yeah.
You do 10 windows and at $1,500 a window, you're going to get a $300 tax credit.
Yep.
All right, so our form for this, $56.95, covers qualified solar electric property, solar water heating, qualified fuel cell installed in connection with your main home.
Did that just blow down here? Dude. No. That trash has to go home by me or Shane. You put that sucker. No, you know what? We need it. We can use it to load up files. Don't cut it up. Just put it in the back room.
Because I was just going to put it in my car and take it to my office and put it in my dumpster.
No, don't. Right here.
Okay. No, that's fine.
You got a dumpster, well, la-di-da.
We have a trash can.
You have a trash can, well,
And we're
la-di-da.
storing back there, and then we have the.
Yeah, but it took all
And we
last
always
season to
keep
me
boxes
carpet
Oh, I
and
gotta
get the
get file
daycare
cabinets
center
here
to
in the
quit
next
using
one.
our trash can.
Yeah, those work.
Yeah, we actually
Finally, they did.
they finally got-
their own trash
they
center.
finally got their own trash can back there.
Yeah.
They still use ours, but between the two, we still have enough room to put our trash in.
It's just the poor little ladies on the corner. Are they
Yeah, they
using their
can't do
trash
that.
again? Yes, ma'am, they are.
So, I hate talking about this part because it's been superseded.
If you see it, you're just basically going to tell somebody, I'm sorry,
This is your last year.
this is your last year. You better get it and do it now.
Well, in 8 years, I've seen that
Because none of this
come in
qualifies.
one.
As of next year.
Before 2021, the credit was even worse because it was a
It was
lifetime
a
max
one-time thing,
and a lifetime maximum.
yes.
Yeah,
And you
if
can
you're-
only
if-
claim it 1 year.
If you're
Your
going to do
clients are the
residential,
only ones we have that-
we've got two. Yeah, we've got 2 of them, and I think last year was the last year for them. They expended all of their credits, so they're out. They're done.
Well, that's good.
That one older couple did.
The older couple where the spouse passed away, they
No,
still
that was a different
they had energy credits. They used up the last of their energy credits last year on the final return.
one. I bet they
So
were.
the credit could be $600 for windows, $250 for exterior doors, $2,000 if you got an
Oh, yeah, no. They used
qualified
use it all up.
heat pump or gas heat or water heater or something like that.
Yeah, it's a solar heater, I think.
Nah.
Yeah, there's one for
Oh
solar
no.
heater.
Well, yeah, but this is electric or
Geo-
natural gas heat pump.
Geothermal, that's what I'm
Geothermal.
thinking of.
Yeah, all of those. Hire somebody just to come and point the infrared gun at your house to find out where you're losing energy. You can actually write off $150 of his bill
Yep.
to find out where you have an air leak.
Yep. His energy audit.
Yeah, which is what that is.
Yeah.
And all this expires.
I actually like doing them, so that was another thing
Well,
they would send over here.
Yeah, that's the problem.
These weren't so bad. It's the next ones
Yeah.
that are the real problem.
So here's your form for that. Look, it's a 3-pager.
Yeah.
Because this credit is complicated,
It is very complicated.
and it's complicated in a way that most people don't really qualify for it. Again, it's a non-refundable credit. And again, your credit is very limited.
And it's only good for 5 years.
Yeah.
It'll only roll forward for 5 years.
Yeah, the first time I did one, I looked at it and went, what the hell is this? So, yeah, it gets complicated.
If you have a client that has this, and typically at our office we've been lucky, clients have called ahead of time
Yeah.
and said, hey, we've got solar on our house. What do we need to qualify for this credit? I tell them, you bring me every single thing you signed
Yep.
with whoever sold and installed your unit, because there's stuff on there,
Yeah, you gotta-
wattage saving rates and that have to go on there. And if you don't have the whole contract where all of that information is, you can't
Nope.
fill
Can't
out
use
that
it.
credit.
Yeah.
And this was the most worthless credit right here.
Clean vehicle credit 8936. According to that, it's going through 2032.
Wrong.
Nope.
OBA expired it back in September. Now let's talk about how bad it was in the first place. These are for qualified plug-in vehicles in service before 2024 or 2025.
No, it's just done.
Yeah, I want to get my cup.
Oh, I thought, I'm
A
sorry.
credit of between
I thought you were going to turn it
2,500
back
to
on.
7,500 non-refundable was available. Credit phases out when eligible vehicles manufactured by the manufacturer exceed 200,000. So if they make a lot of vehicles, you don't qualify. It had nothing to do with you. It had to do with the size of the company you were buying it from.
How many cars did Tesla make?
They don't qualify.
Exactly. So if you went out and bought a brand new Tesla, hoping to get this credit,
You don't qualify.
that's the first kicker
Yeah,
to disqualify people.
and let's eliminate Tesla for a second, and let's plug in Ford instead.
Yeah.
Eligible vehicles manufactured. That's not by model. The electric Mustangs versus the electric F-150s aren't two different lines.
They're EVs.
They're all EVs. They all fall under this. So do you think Ford made more than 200,000 vehicles? Yeah.
Did
Yeah.
they?
Yeah.
Well, yeah, okay.
With
because-
all the different
because
lines
they did
combined.
the different, yeah, they did the different.
Because I just named two. I think
Right, right.
there's a Focus in there
yeah,
someplace.
there's a Focus and an Escape.
Yeah.
Yeah.
So, and these aren't the hybrids either that you're thinking about.
No.
Like the Civics that are both, that run on gas when they need to and run on electric when they can't.
Yeah, and
That doesn't
Dodge-
qualify at all.
Dodge started doing it.
Yeah. All right. So for this credit, first of all, the vehicle has to be placed in service after 2022 for 24. So we'll assume it goes up 1 year. The $7,500 credit is split into two components. $3,750 in critical minerals requirements set aside, meaning that the stuff in the battery was extracted in the United States or a country which the U.S. has a free trade agreement, or it was recycled in North America.
Yep.
And we're gonna know all of that on.
And we ain't gonna know any of that.
No.
We're up to, well, I'll just keep with it. We're up to Ford telling us that. Granted, we already know that they don't qualify, but we are, we're already providing, we're relying on them. Also, 3750 of a battery component required to satisfy the percentage of the value of the components contained in the battery that was manufactured or assembled in North America must exceed certain applicable percentage amounts. So not only is most of the stuff that's in the battery have to be from the United States or a free trade country, when it was assembled,
That'd be done here.
it had to be done here.
That throws out Toyota.
Well, no, because they do have U.S. plants. So, again, we don't have enough information per se. We'd have to do some digging.
Yeah, you have to see exactly where the car was manufactured, right?
You would, and then you got to find out when that battery was, where the battery was
Was
manufactured.
manufactured.
I don't care where the car was made.
No.
They could have made the car in Tokyo, but they didn't put the battery in until they got it
Got it
here,
here.
which would make sense because I don't want the battery exposed to all that salt water.
Right.
Yeah.
You're a pain in the ass.
1 credit per vehicle. Well, that one actually makes sense.
Yep.
No credit is available unless the final assembly took place in North America.
So if Toyota assembled your vehicle in Tokyo and shipped it over,
But
You
they
don't
put
call-
the battery in here.
The final assembly of the battery.
okay,
would have
final
been-
assembly. Okay.
If
so
they
that
did it
would
at the
qualify.
Huntsville plant, you're good.
Yeah.
If they did it at Tokyo, you don't
Nope.
qualify. No credit is available if the manufacturer's suggested retail price exceeds for pickups, SUVs, and vans. Can't sell for more than 80,000. Cars can't sell for more than 55. Now go find an electric car that's that cheap,
Yeah, good luck.
Brand new.
brand new. Yeah.
Good luck.
That's a brand new price.
It can't be used.
Yeah, because if it's a used vehicle,
It may have already been claimed.
it has to be it can't be older than 2 years, and it can't cost more than $25,000. So find me a 2023 used UV for less than $25,000.
Well, I might be able to find one with a salvage title, but do you
That
wanna
meets
buy
all the
that?
other requirements for the battery and everything else.
This is the least of your concerns. You don't qualify for the credit if your income was above these thresholds. We've
Keep
already
it-
found out that's your least of your problems.
Yeah. Yeah. And that's your modified adjusted gross income. That's you're basically when they say modified adjusted gross income, think total income. All the money you made lumped into one great big fund before we start taking anything out of it.
Yeah.
That's not your adjusted gross or your taxable. That
No,
is
that's
your
just basically your total
total
income. And here's your form, and I will tell you that I've never filled out this form in my life.
Nope. Nobody's qualified for it.
It's impossible to qualify for. You'd actually have to basically find some scientist that's building a car. Then you'd qualify, maybe.
I've had
Yeah, you need Doc Brown.
In the time that I've been doing taxes, I've had one person come in to try to claim it. He bought a brand new Tesla Y-Class for $83,000 with all the bells and whistles.
That's over 55, didn't qualify.
It's over 55, didn't qualify. He bought it from Tesla. They made more than 200,000 vehicles. He doesn't
Doesn't qualify.
qualify.
Then why do they
Great
even put
problem,
these
Carl.
things in our taxes if you don't?
It was
Qualify.
this
Because they're
credit
trying to be nice, but
this
they're
credit
going to figure out a way for you
was
to
a
not get it.
completely political ploy to get people to move away from fossil
Gas.
fuels
Mhm.
and go to renewable energy.
Yep.
We need to save the environment. Climate change is gonna kill us. Quit running your diesel, quit running your gas, go electric.
Yep.
This was designed to get people to switch.
But
But-
normal people can't afford a vehicle like
They
that.
can't afford a vehicle like that, and the politicians didn't want to give away the money. That's why they put in so many restrictions.
Yep.
They're like, look at what we did. You can get a $7,500 credit for buying an EV, and that's all they tell people. They don't tell people what you actually have
How
to meet
qualified you
to
are.
qualify for it. It's kind of like it's kind of like the safe senior credit versus the homestead credit. How many people actually qualify for the safe senior credit?
Actually, I have more that's been qualifying for that than, you're talking about the PR or the regular homestead?
Yeah.
Yeah, we have more that are qualifying for the
Mine's
PT.
still
True
up.
statement. K40 PT is much more popular than
Yep.
K40H here.
Really?
How old do you have to be to qualify?
Same.
Same,
Same.
it's based on
I
income.
still haven't gotten my homestead.
It's based
I
on
filed
your
in
income,
March.
yeah.
Well, we'll come back to that on the last day because that's the one Kansas thing that I talk about.
Yeah.
I don't want to talk about aviation credit,
Oh my God.
We have a lot of those, believe me, we have over
but you
6
guys
of them.
have more than I do. I might have him talk about it instead.
Actually,
Yeah,
I
we have
can
a
do a
lot.
lot of them.
All right, so another credit is 3,800 is a general business credit. Consists of several credits that are usually applied only to individuals who are partners, shareholders in an S corporation, self-employed, or have rental property. Another credit I've never used.
Mm-mm.
This, what do we want to say about this? Yeah, besides that.
Yeah.
Another non-refundable credit. Basically, it's trying to cut down on some of your taxable income because it was actually a corporation's income, and instead of passing it completely through, they're just giving you a tax break for being a member of this corporation, so you don't have to bear all the load of the pass-through that Matt was talking about a few weeks ago, which is an entirely true statement. Microsoft doesn't pay tax because the shareholders do. Well, that's not an S corporation; it's a C corporation. But you can see where we're going through. An S corporation is the same idea, just smaller. I have less than 100 shareholders in this whatever company this is. George's Pancakes,
Yeah.
you know, and the profits are being passed down to be taxed on it. Well, in the interest of trying to help out the small business owner, there's another thing that's quite like this. It's called QBID, which we'll talk about in like 4 tax classes. But it's similar idea.
You'll hit it in Schedule C's.
Yeah.
Yeah.
Well, it's actually it's its own. It's part of the second part of that chapter. So it's like 2 classes after the Schedule C.
Oh, so Schedule C depreciation and then QBID.
Yeah.
Okay.
Schedule C is broken down into 2 parts: flanking depreciation. So basically, not really going to use this credit very often. I can't think of one time that I've actually triggered it, and I do. We do get K1s that have S corporations on them,
Or partnerships.
or partnerships. Yes.
K1s look scary, but they're really not.
Yeah.
Prior year alternative minimum tax credit. If you paid alternative minimum tax in a prior year, you may be able to claim this credit this year if your regular income is greater than your alternative minimum tax. Alternative minimum tax is basically tax that's running on your passive income, shall we say? And you were taking advantages of some huge losses.
If I didn't have any income coming in at all, and all I got was a 1099-B, and I had $48,000 in capital gains distributions, and that's my only income. My capital gains distributions qualify for 0% tax,
Right.
which means I just made $48,000 without having
free.
to pay any tax. That triggers that.
Yeah, alternative minimum tax. Well, since you had no other income, we're not going to let you get away with it directly. We're going to tax it at this rate.
Right.
So that closes a loophole of saying, well, I'll just live off of my stock trading
Exactly.
and not pay any tax. Well, no.
That was the easiest way I know of to explain AMT.
Well, yeah, and this happened to one of my Canadian clients one year because the exchange rate was so bad
Oh, yeah.
that they actually got dinged with this. It really sucked.
Yeah.
Schedule R, credit for the elderly or disabled. You may be able to take this credit if either of the following applies. You were over age 65 or older at the end of the year, or you were under 65 and you meet all the following requirements. Permanently and totally disabled on the date you retired. If you're retired on disability before 77, you weren't permanently and totally disabled at the time. You must have been permanently totally disabled by January 1st of 76 or January 1st of 77. Which, oh, that was a long time ago. You might be dead by now.
No kidding.
'Cause I'm still alive.
Yeah,
Yeah,
but you weren't
me
retired
too.
at that point.
Yeah,
How
but
old
you
were
weren't-
you?
Yeah,
11.
yeah. I was gonna say I was like 8.
You received taxable disability income during the year. On January 1st, you had not reached the mandatory retirement age. So I'm not retired on disability.
Right.
So I have to meet all of those. Married filing separately obviously
It's
don't
just
apply.
that flow chart for the disabled.
Again, another non-refundable credit. Now look at our income levels. Your adjusted gross income must have been less than or equal to or more than 17,500. For the singles, 20,000 for married filing jointly and only one spouse qualified, 25 if you both. Married separately, you get 12,500. So if you go over those, you don't qualify. Which is stupid. Because look at these numbers.
Qualifying surviving spouse doesn't get the married filing joint credit.
Yeah, it's going to go back to
Back to the single.
singles. But look at this. Look at these numbers here. $25,000 in income. If my standard deduction is $32,000, that means that I made less than my standard deduction. Therefore, I have no taxable income. Therefore, I owe no tax. Therefore, I don't qualify for this credit.
Well, yeah, but you had to make more than 25,000. Not less than. You have to make more
You
than that.
can't take the credit if your adjusted gross income is equal to or more than.
Oh,
The credit is stupid.
yeah. You're okay. Yeah. So if it's more than 25,000,
You don't get it.
you don't get it.
All of those numbers, and they don't move, all of those numbers are below the standard deduction for that filing status.
With the exception of one
Yeah, with the exception for the married filing separately and you lived apart.
and the single.
Yeah, and the single.
But still, if you think about it, if you're 65 or permanently disabled and you're living on less than $17,000 a year,
How much do you have in tax?
I mean, you figure at that point you're probably on Social Security and you have no taxable income to begin with, so you have no filing requirement.
Exactly. And this is a non-refundable credit. So even if I did qualify for it, at these income levels, my credit's going to be what, $30? 40, 50? Not very much. All right, so there is a point in the world where, for some reason, the Congress of the United States has determined that if I make so much money, I don't have to pay into Social Security anymore.
No, you're capped at what you have to pay into Social Security.
Well,
If I make $200,000, I won't pay more than $10,453 into Social Security.
okay.
If I work 3 jobs and I pay $15,000 into Social Security, I can get a credit for anything over that $10,453.
Well, different way of saying what I said, but yeah, yours is better. So if you make more than $168,600, you don't have to pay Social Security tax anymore. Is kind of what I was saying. But he's saying that if you paid more than $10,453.20 into Social Security, you don't have to continue to pay into Social Security, and if you do, you can qualify for a refundable credit.
Yeah.
But rule.
Yeah.
If I only work for one employer, I don't qualify for the credit. The employer should have stopped it because they knew, and they should have stopped withholding.
You have to go back to the employer and get your refund from your employer.
Right. Now, if I work for myself and somebody else, or if I work 2 jobs, neither one of them are going to know that I've crossed over the threshold. Now I can file for the credit.
Yeah.
So, like I said, there's 2 ways to get it. I was working for somebody and myself, and I made this much money, or I was working for 2 different people, 3 different people, 4 different people, and I crossed this threshold. No one person knows.
So the federal government will give it back to me.
Yeah. So the federal government will refund me. So here's our maximums of wages or amounts that I paid. Either way, they're tied together.
Mm-hmm.
As I cross that 453 or 10,453, I don't have to pay any more Social Security tax.
If you're working at a job and you cross that point, you should see on your check stub where it says Social Security and
The member should be saving its
and
last week.
Medicare should say 0. Well, no, not Medicare.
Medicare doesn't stop.
Just Social Security.
Just
will
Social
say
Security.
0.
Nobody does. Or at least people that come to us. Credit for federal tax on fuels. I have no idea about the future status of this. Enter any credit for federal tax, excise tax paid on fuels that are ultimately used for a non-taxable purpose. For example, an off-highway business use. If I'm driving my farm truck and I had to stop at Quick Trip to fill it up,
Yes.
I can take that expense of taxes that I paid on diesel for my farm truck, and that's all it's used for, the grain truck, really,
Yes.
the grain truck. If I had to fill it up at Quick Trip, the taxes I paid I could actually write off as a tax credit. Non-highway use vehicle. If I had to pull my John Deere tractor up at Quick Trip, I'm good.
If you purchased diesel from a company like Winger Oil or whatever, and they came out and they filled your 350-gallon diesel tank so you can fuel your farm machinery, your farm trucks at the farm, you don't get this because you've not paid federal tax.
Yeah, they didn't charge you the tax.
Yeah, you're not paying federal tax on that diesel from that company. You're basically paying what the company says that gallon of fuel is worth without having any federal tax levied onto it.
So you're not going to use this credit either.
No. Farmers are about the only one who could use this, but 9 times out of 10, you'll never see it on a
They're not
Schedule
gonna,
F.
Yeah, they're not going to mess with it, even if they did fill up at Cinex.
Yeah.
They're not going to mess with it.
Yeah.
Because they fuel from home for a personal vehicle.
Well, yeah, it's a trade-off.
Yeah.
So
Yeah.
they're just like, oh, never mind, because I use it for the car.
Yeah. They
They're toys.
fill up their 300-gallon tank, and when
When the pickup truck,
when the pickup truck or the wife needs fuel in her truck, they just pull up to the thing and fill it up, go.
yeah, which is somewhat illegal, but
It is.
That's a different problem.
But
Highway Patrol's not going to check that gas tank, but they will check the tank of the semi-truck.
right.
Yep.
And if you're a commercial vehicle and you have the wrong color diesel in there,
Oh
you're
my God.
you are going to pay
What
a
color
lot of
code?
money.
Yes, yes,
Fuel,
yes. For example,
Off
aviation is red.
highway vehicle,
but it's
off
fine, I
highway
think, though, right?
It's a different.
It burns different.
Yeah.
off highway fuel for diesels is red.
Yeah.
So when they pop the top, the first thing they do is shine a light down there. If that fuel is red, you're automatically out of service
Because you got it at home.
because
it's the wrong color.
it's the wrong color vehicle. You're using off highway fuel on the highway.
And unless you're a farm truck that says not for hire,
Unless you're a
Oh,
farm
yeah.
truck
Yep.
en route from your fields to an elevator.
Yeah.
Right.
What's the other code?
They don't put dye in the,
they
in
don't
the stuff
put-
you get
they-
at Quick Trip.
Yeah,
or,
they don't
or
put dye in the regular. It's
at
just
Love's.
it's clear.
The only reason
It's
I
just
know
oily.
Yeah.
is like certain aviation colors, it's the amount of kerosene they have in it.
Yeah. That way you don't mess up JP3 with JP8.
And you'll
So-
find out a lot of race cars use aviation fuel.
Yeah, they use the purple fuel.
Heard of it.
So, but yeah,
Gives them more horsepower.
Yep.
Also burns through a piston fat. No, wait.
Yeah.
True statement, but
True statement, yeah.
Keep those rings like nothing.
so you're not going to fill out this form again. Another credit that we talk about for no good reason. You can apply for a credit for tax paid from a real estate investment company or a real estate investment trust distributed on long-term capital gains. Again, you have to have a K1 to qualify for to even begin to qualify for this. There will actually be a box on there that says, "Well, this is how much you paid in capital gains tax." If that's true, you qualify for this credit. Don't worry about it.
probably won't see that one.
We don't have people coming in here that are involved in real estate investment companies or real estate investment trusts. If you do, there's a credit available. Do a little extra research on figuring out whether or not to qualify, but we can basically tell right away. Because again, it's going to be on undistributed long-term capital gains tax,
Yes.
which will be its own box on a K1. It'll be identified right there.
Yep.
With a number. It's not that hard to figure it out.
And more than likely, once you put it in our system will
Well,
tell you, hey,
automatic-
you need
yeah.
to fill out this form.
Or fill it out for you.
Yeah, or fill it out for you.
Because they'll see the code on the form and say, okay, we know what to do now. All right, so let's take a 10-minute break and then we'll go over we'll do the classwork. So
Dun, dun, dun.
I'm going to hand out classwork questions today. We're actually going to do them, and in about 10, 15 minutes, we'll go over them. It's been a while since I've had time to actually do this. Well, I'll peruse one, I guess.
Don't you bring me one, I don't want it.
I'm not giving it to you. Amy was the only one that really needed it. Because she's still relatively new.
M&M's all over the place.
I think that's a Skittle.
Oh, I lost one earlier.
This looks more like a Skittle. Which then I'll blame Kelly because he was the last person I saw eating Skittles.
Was he eating Skittles?
I swear he was eating Skittles last
I
week.
thought he was eating M&Ms.
I had Skittles.
It's like the meatball that rolls away.
Well, since there's fresh coffee, I'm going to get some.
5-second rule.
God dang, we rolled the whole pot and it's almost gone.
I know. Somebody else got coffee that we weren't expecting, I think.
That's okay.
It's all right, as long as it gets drank.
Yeah,
So,
as long as you're not throwing it out.
half a
I
pot
just
dumped is kind
I
of
just
a.
wanted to warm it up. So the evening class will basically be done about 7:30.
Right.
The evening class runs about half as long as ours.
Kelly will occasionally ask some good questions because in his second year he knows now the question he'd like to hear.
Right. Yeah, next year. Well, this year, and I'm gonna have fun with my car dealer as he's buying that
Yeah,
property.
No, that sounds like fun actually.
He's buying the prop. He's buying the property. The front half of it is all he wants to use. The back half of it that he's bought, he's already got 3 offers on to buy.
I would be uncomfortable with that because now I'm granting. I'd have to grant right of way access
Through my business.
property.
The front half has a really nice big building,
Mm-hmm.
and he's already got a landscaping company that wants to rent out the building in the front part of his property.
Mm-hmm.
Behind that is more open parking space and another small building that he wants to turn into his office, which is fine. And then anything back beyond that, he doesn't care about.
Mm-hmm.
So,
Damn it! I forgot to bring my paper.
here we go.
I had a case of paper delivered, but it was delivered to the house because it's off season, of course, and I forgot to bring it in because it was delivered Friday.
Okay. So, this is the property he's buying.
Mm-hmm.
And he gets this all the way back through here.
Mm-hmm.
Okay?
Mhm.
He only wants to here. This is that little outbuilding he's talking about and the parking area for his used cars.
Mhm.
And this is the big building he's talking about here that the landscaping company wants to rent out. So, and this over here, none of this here, this little L right here, none of that's his.
Yeah.
Just this comes back across here, and then that, and then all of this goes all the way back to like right in here somewhere.
Wow.
And he doesn't want any of that, but he's got other people that are wanting to buy it. I was like, well,
Do what you do.
that's what I told him.
Told him, I said, keep in mind, I said, you know, when it comes to stuff like property tax and whatnot, I said, if you're going to rent that front end out, then we're going to have to sit down and break out your property tax unless they give you separate property taxes. If they just do it for the whole property, we have to assign a figure, an amount, you know, is that 50% of the property? Is this 50% of the property? And then half of your property tax is going to have to go for your rental stuff.
Mm-hmm.
I said, so next year, Ray's Classic Cars, it's probably going to show rental income, because whatever they're paying you a month to rent the building and rent the space is income for Ray's.
Mm-hmm.
And he's like, okay, well, what about utilities? I said, it depends on who pays utilities. If they're paying utilities, you don't get anything. If you're paying the utilities for the building, then it's an expense on your rental. I said, but keep in mind, you only get enough expenses on your rental to offset your passive rental income,
Mm-hmm.
and the rest rolls over. Like, okay. So even though he has rental income, he might not have, you know, he might show a 0 or a negative, but anything under the negative should roll over to the next year for passive rental income.
I was wrong about the date.
And as far as I know, he's still keeping the 2 properties on South Broadway for the partnership.
We should.
Well, yeah, because all they're doing is, for that, him and his partner are just adding money into the partnership account and then paying all of the bills for the properties out of the partnership account. So instead of having an income, they just add to their capital contributions to the partnership. And once we take out all of the expenses, then that adjusts their basis in the partnership. I had to actually get on the phone and explain that to another tax client.
Not everybody
Well,
has.
his partner came in and he's like, my tax guy wants to know, why there's no income. I'm like, does he not understand that you and Ray are just making capital contributions to the partnership and then paying the expenses of the properties associated with the partnership out of that? And he's like, is that what we're doing? I'm like, yeah, otherwise you guys have self-employment tax, and Ray didn't want self-employment tax.
Right.
And he's like, oh,
No.
okay. Can I come down and get my paperwork? I'm like, yeah, please come down and get your paperwork. And then he went and explained it to his accountant guy, and the accountant guy's like, oh, okay, I understand what's going on. I'm like, good God.
You're a CPA. Come on. I was wrong about the date for your service. It's supposed to be the 27th, which is Monday.
Next Monday? It's a good thing we're out of
Tax season.
tax season completely. Still didn't get the Nashes. I don't know what it is, but she won't sign a remote signature package. I refresh the remote signature package every Monday when I go in, and she won't get online and do the remote signature package. I've left her messages on her phone.
She has roughly 2 weeks.
And technically, right now, their return is basically in a state of rejection and
Yep.
technically unfiled.
Not technically. It is unfiled.
Yeah.
And if she wants to get it filed before next tax year, she's got about 2 weeks.
Yeah, because what?
Irish-
Typically,
Irish
November
shut down.
15th or so is when
Roughly.
they shut the computers
Yeah,
down.
they give it a month.
Yeah.
So
And then after that, it's not going to make any difference. We just have to wait and do it all.
you
Next
have to
year.
wait till January, assuming that everything is going to stay on time.
And for them, I would actually suggest that they wait. I wouldn't have them come in and do it in January. Well, not January 1st. I'd have them come in first part of February once the computers are turned back on.
Yeah.
Because they're having to file a return, and then once it's accepted, turn around and file an amendment to that return. Because of what they claim their daughter on their tax
Oh,
return.
yeah, okay.
And she filed a tax return not stating that she could be claimed. And then she went ahead and did an amendment saying that she could be claimed,
She undid it, but
but without having all of the PTINs to the current return with her on it, it won't accept it. So my only option now is to file it without her, and then once it's accepted, turn around and amend it with her on it. And next year doesn't matter because 2025 she wouldn't have been on it anyway. She graduated May or whatever of this year, and is headed for Italy with her husband. So fun. On their original, they didn't owe federal. They were getting a refund, but they owed state, so they went ahead and paid the amount they owed state without ever filing.
Well, at least they're caught up.
Worst case scenario, the only thing they should get, worst case, is a letter from Kansas for not
Thanks for the payment. Why?
well, no, what I'm figuring is once we get this filed, they may get a letter from Kansas for not filing on time because it's past the extension, and maybe interest.
Oh, guess who hasn't paid anything on her?
I'm
overdue
thinking
taxes?
probably not because they paid it.
You think?
Yeah, so the tax
What are
on,
they gonna do?
The
since
penalty?
they had the money, since the state already had the money, the tax on what they owed, by the time it was filed, it's gonna be zero.
Even for not filing on time?
I'm still thinking that since they paid it, they've avoided it.
Okay.
I would be surprised. I could see the letter saying, hey, you sent us money, why?
Her insurance.
Because you haven't filed.
Yeah, we don't know what this money's for, but but I would be shocked if they got a letter after they filed it saying, oh yeah, you owe us late filing penalties, but thanks for paying on time.
Right.
I just don't see that.
Okay.
If I did, I think my first letter would actually be to Bob Cleveland, saying, hey, they paid. Is this really, I would make a case for the
Do you have Bob's info? Matt?
Who?
Bob Cleveland, the taxpayer advocate for the state of Kansas.
No.
And we need to get that to
We
you.
need to get that to you.
Yeah.
Okay.
Because he had such a good rapport with Brenda, wasn't it?
It was with Brenda because she talked to him all the time.
Mm-hmm.
He was the taxpayer advocate for the state of Kansas was actually sending us business.
Mm-hmm.
If people were in Wichita and needed a tax return filed, he'd say, "Go see these guys."
Okay.
So no, I need to get. He's like I say, he's the taxpayer advocate for the state of Kansas.
Okay.
For KDOR. And so, like, if you had a homestead return that was being hung up and you don't know why, send him a letter, an email. He'll tell you why.
Okay. All right. Yeah. Let me have that information so I can send him an email and ask him why Bromley's
Yeah, that's a good example.
homestead is being held up.
Identify yourself. Identify what store you're with.
I have a feeling I kind of know why it might be because my contract for deed was purchased by another man, and I don't think that
He
They
hasn't
got
your
it
name
all.
anymore.
and that my contract for deed that they have as a copy of is my original with my other people.
Do you have a new copy
No,
from?
I do not.
I thought I had
My
a contact
copy
card
of
for him
contract for
in
deed.
the
I
email.
have a
I
feeling
know,
why it's
that's
being held
not
up.
my question.
Because
Well, what's
the
your
old
question?
owner's not the original, not the
Who passed?
person on the contract.
Right.
Did you do anything
And
with
it's the new
this?
guy that's on it.
No.
Okay, I'll
So
see
he's
what
gonna
it
have
is.
to reissue me a new one.
All right, so let's talk about the classwork and we'll be on our way. Which form must taxpayers file to reconcile advance payments from the premium tax credit with the tax actually allowed? C. You need the 8962. 1095A, you need that too, so if you have that, you're partially right. But the 1095A feeds the 8962 where the actual mathematics happen. But
I just want to make one quick statement about the 1095A. When you're filling it out, it's really big, it's really long, it's really involved, but if you have somebody that has all 12 months filled out, you can get away with just filling out the annual amounts for each column, and you don't have to fill out all 3 columns for each individual month. You just fill in the totals.
Yeah.
If you have a form that has, anything less than the full 12 months on there, then you have to fill out each individual month.
or if the numbers change halfway through the year.
Technically, no, because the annual total is going to be the same. As if all 12 months are filled out, even if you've got different numbers in the boxes, if all 12 months are filled out, you can still get away with just doing the annual total. But all 12 months have to have numbers in it. If you've got January through April, and then you've got zeros in May and June, and then
No,
in
then you
July
gotta
you
fill it
have
all
numbers, then you have to fill them all
Yeah.
out.
Foreign tax credit for individuals is generally computed on what form number? D.
Matt, that's yours.
Oh, this is mine?
Yeah.
Head of household
Thank you.
filer cannot claim the retirement savings contribution credit if their adjusted gross income exceeds
B.
B. Under the residential clean energy credit, what percentage of qualified solar electric property costs may be claimed for property placed in service after 2022?
30.
30%.
Thank you.
Letter D. If a new clean vehicle meets the battery component requirement but not the critical minerals requirement, the maximum credit available for the vehicles placed in service after 2022 is half of the 750 or 7,500. We saw earlier, half was the materials, half was the assembly. Carry forwards and carry backs on the general business credit are tracked on Form 3800. Excess Social Security tax withheld from wages is claimed on individual tax returns as a credit reported on Schedule 3. Qualify for the elderly or disabled while under age 65, the taxpayer must receive which of the following during the year? Taxable disability income, yes.
So if he's just on Social Security disability and he's 65, does he get the credit? If his only income is SSDI, he's 65 years old, does he get the credit?
No.
Because it's not taxable.
Right, and it's also not refundable, so either way.
Right.
For single owner filers, no clean vehicle credit is allowed if your modified adjusted gross income exceeds $150,000. Which form do taxpayers receive from the health insurance marketplace if they must that they must use to figure the premium tax credit? See, the 1095A. Alrighty.
You can see where a lot of these credits are nothing more than political talking points. Look what we've done for seniors. We've given you a $5,000 credit. Can you qualify
90% of us
for it?
don't qualify.
Yeah, good.
Can you qualify for it? Probably not. But hey, look at us. Look at what we did for you seniors. We gave you a $5,000 credit. You know, it's
The
gonna.
first owner of this franchise basically said, the income tax form is a political document through and through. And he's
Yes.
right. It really is. It's designed to modify behavior, perhaps, in some regards, which is a lot of what tax is. Pay an extra tax on liquor because it's a sin tax, Hopefully you'll buy less liquor.
Designed to get votes. Who's appearing to provide best for the American people? That's what a lot of your tax legislation is all about.
Look what I did for you.
Yes, look what I did for you. Let me have your vote. Look what these people aren't wanting to do for you. Don't give them your vote. I mean, we see it going on right now in Washington, with the government shutdown. It's not our fault the government shut down. We're voting to open the government. These people won't vote to open the government because we passed a bill in July that took away $1.5 trillion of their spending. Now, until they get it back, they won't vote to continue funding the government like they did in March. So you have to ask yourself, what changed between now and March? Well, one big beautiful bill was passed in July, and it took away all that funding. Now they want it back. It's a political football.
And both